And then in Tanzania, inflation has maintained its downward trend this year, slowing down to 8.3% from 9.4% in April. And to look at those numbers, we're joined on the line now by Matthew Searle, who is Sub-Saharan Africa Analyst at Business Monitor International. Matthew, let's start with that number that we've just mentioned there, the inflation rate, downward trend, slowdown in food prices, the main reason there apparently.
Yes, we've seen a sort of a 1.6% month-on-month decline in food prices. Not entirely unexpected at all. This time of year, the Msimu harvest coming onto line, so there's sort of adequate supply in the market. So we're expecting food prices to continue to decline for the next couple of months. Interesting for us is that core inflation has actually started to tick higher over the last couple of months, and we think that is a sign that inflation is not likely to sort of head too low like it did in Kenya and Uganda, rather, where it sort of headed sort of towards 3%. We think Tanzanian inflation is likely to bottom out around sort of 7 to 8%. That's what core inflation is telling us anyway.
Well, I see the stat that in 15 of the last 16 months it has fallen. What is regarded as the ideal rate? For example, in South Africa, we have this band of 3 to 6%. It's been close to that 6% for some time. What's regarded in Tanzania as a good inflation number?
I think the authorities' main aim is to keep it in the single digits. So I don't think they're going to be too uncomfortable with levels where they currently are. At the start of the year, their aim was to get core inflation down into single digits by June 2013, and with core inflation at around 7% this month, in May rather. That target was easily achieved. So I think inflation at current levels aren't going to worry policymakers too much. When you've got the economy growing at sort of 7-8% per annum, you've got to expect that inflation is going to be higher than some of the more developed markets. So I think that's just one of the costs of that strong growth.
Well, there are a lot of countries that would very much like growth of 7%, and that 7.3% I think is the forecast. What's driving that?
There's a combination of factors. I think investment, both public sector and private sector, is playing and will continue to play a very important part in Tanzania's growth story. Obviously, they've had massive issues with the power sector, and the government has pledged to invest a lot of money into it over the next couple of years. So that's going to be a very important driver, not only from the investment itself, but from the productivity gains that are reaped from that for the private sector. Then obviously you have agriculture, which is a very important part of the Tanzanian economy. You've got a lot of farm investment flowing into the agriculture sector, which is improving productivity and efficiency in the sector. And then looking sort of further ahead over the longer term, you've obviously got natural gas, which stands to be a bit of a game changer. I don't think we're going to start seeing significant investment. We're still very much at an exploration stage. We're not going to see significant investment into the sector for a couple of years yet, and production probably won't come onto line until 2021 sort of at the earliest. So the effect of that will only be felt sort of in 3-4 years from investment and production, even after that. But that's something that bodes well for longer term growth.
Certainly sounds encouraging. On the fiscal side, tax collection at a time of high growth, companies and individuals presumably are benefiting than that, but the government also wants to get its take in relatively good times. How efficient has the tax collection system become?
Things are actually looking up at the tax, the government's tax take. Looking at the half-year figures for the 2012-2013 fiscal year, so that's from July to December, the government collected almost 100% of what it was hoping to collect when it announced the budget. I think about 99% of the tax revenue it was hoping to collect. And importantly, from the government's point of view, corporate tax was well over target. I think they were aiming to collect about 720 billion shillings. They ended up collecting 800 billion. And the comments in the budget execution report were that mining companies, the take from mining companies has increased. That's something the government has highlighted as something they're a bit concerned about, that gold miners in particular aren't paying their fair dues. So I think the signs from the most recent data that's available are positive that the tax take is increasing and sort of certainly heading in the right trajectory.
Yeah. Matthew, it all sounds pretty good. Inflation roughly where they want it. Growth at 7%, strong by any measure. Tourism looking good. And as you say, improvement in tax collection. What's the catch for the Tanzanian economy? What would people be worrying about coming out of the bush at them?
Well, Tanzania has sort of been a perennial beacon of stability in East Africa. And I guess that status has come under threat slightly over the last 18 months to 2 years. You know, you've had instances of protests against high food prices, against electoral concerns organised by the opposition, Chadema. Recently, we've had protests against the plans to build a pipeline from Mtwara in the south of the country up to Dar es Salaam. So I think there are signs that although Tanzania has been growing relatively quickly over the last decade or so, that isn't filtering through to sort of improved living standards for the average Tanzanian. And I think the extent to which that is building up sort of a threat of political stability, that's obviously going to impact investor sentiment in the country. Tanzania runs a massive current account deficit, as many other economies in the country, in the region do. And if there is a sort of a hit to foreign investment, that's really going to be a threat to the balance of payments position, which will affect the currency, inflation, etc. So I think for me, it's sort of keeping an eye on the business environment and perceptions thereof.